Now, GAIL saw 4% slip in trade yesterday after sources indicate that Russian gas giant Gazprom has invoked a force majeure on its long-term LNG contracts with the company and is unable to supply gas. B.C. Tripathi, who's the former chairman and managing director at GAIL, and Abhijit Bora, who tracks the space, joins in. Mr. Tripathi, I want to come to you first. Are you aware of these lower gas supplies from Gazprom? And if yes, what would the implications be, you think?
Well, I'm aware. I also read it from the media news. But then this is, I think, a temporary measure, I believe, and it should settle down maybe by month end or so, because these are all long-term contracts. They have international implications. And I'm sure both the sides between Gazprom and GAIL must be working together to find a solution to this. It may be because of a certain limitation on the Russian side, especially from the banking side. Insurance, this restriction might have come. This is my guess. I'm not aware about it. But I hope that they should settle down. And out of the total portfolio of GAIL, it is just 15-16% gas comes from Russia. So you have much diversified, stable supplies coming from US, from Qatar, from Australia, in the portfolio of GAIL. I'm sure it should settle down maybe in a month's time or so.
Gentlemen, good morning. Mr. Tripathi, a very basic question: where does India get most of its gas from? I mean, is it mostly all imported? Broad numbers.
India imports almost 50 to 55% gas is imported, what we are consuming in the country. And this is continuously increasing as our gas demand is increasing. So our dependence on import is going to continue significantly in the future as well. And today, 55% come from abroad. And almost, let's say 40% gas comes from Qatar. And then it is diversified supply coming from US, from Russia, from Australia. So this is how we have a diversified basket, because we had this issue sometime in 2010-11 when this security of supply was a concern. That's why GAIL looked at supplies coming elsewhere beyond Middle East. So the contract were signed at that time with US, with Russia. But this was not visualized the way things have turned out in Europe between Russia and Ukraine. So otherwise, it should have been a well diversified, and that's the advantage we are getting today, that in spite of disturbance in the global supply chain, we are still comfortable, and it's just hardly 15 to 17% gas which comes from Russia. And out of that also, they are supplying most of it, but maybe a part quantity they may not be able to supply, but they'll find some solution to that. Yeah.
So what is the pricing difference right now between Russian contracts as well as the spot prices?
You see, all these long-term contracts are in the range of somewhere around about $12 to $15 price, the current level where the oil is, because they all are linked either to the oil, the Brent price, or they're linked to Henry Hub price. So in the current situation, their price range must be somewhere around about $12 to $14, $15. But the spot prices today are anywhere between $30, $40, $45. Which I have at least not seen in my career of last 40 years, the spot price is going so high. The last high we saw was hardly $22, $23 when similar disruption happens in the global supply chain. But this is a very unprecedented situation which nobody would have visualized a market will behave like this.
Abhijit, we're just coming to you. Sorry, just coming to you. Just one more question, Mr. Tripathi. You said it was more of a speculation, but you said you suspected because it could be because of insurance-related reasons. This disruption. What exactly are you talking about? Insuring the ships themselves?
I believe the credit line, the shipping, the financing side. There must be some restriction through the banks through which the LCs are being opened. The insurance starts being provided on the movement of ships. Otherwise, I don't foresee any problem from the production side in Russia.
Okay, got it. Abhijit is with us. Abhijit, thank you for waiting by. So, Abhijit, from a market point of view, who's impacted? Who's the most impacted because of the shortage that we are seeing right now? As Mr. Tripathi explained, it's not very large. They're still supplying, but some of it, of course, has been impacted.
Yeah, definitely. Fertilizer and power will see the major impact. CGD may also see some impact if they're consuming this gas, because there has been mixing of imported LNG to the priority sector also recently. So I think that these three sectors will have a major impact. Even on GAIL, if you see, this accounts for almost 10% of the contract is for 2.8 million tons per annum, which comes to around 10.3 MMSCMD. So the gas marketing volume will impacted by close to more than 10% kind of volume, and they can also end up paying higher prices because if they subsidize the consumers and take the hit or trading loss hit, then GAIL's marketing earning will be impacted and they will be making losses, trading losses on these volumes.
So when you say the fertilizer and power sector could see a major impact because of the supply constraints, Abhijit, can you just drill it down to specific stocks? What could the impact be?
We don't cover fertilizer stocks, so we can't comment on that. But the consumption side, these GAIL is a major supplier to fertilizer stocks, so there will be some impact on the supply side issues for them.
All right.
But we can't comment on this stock specific thing. GAIL will be impacted in the short term. That is can be seen because of the trading losses plus the volume impact.
Okay, gentlemen, thanks a lot for your time today.